All right. Looks like we are getting we got some people flowing in to the call. Happy Monday. We'll give it 30 seconds before we get started here. All right. Beautiful, beautiful. All right. We are 1 minute in. We are going to go ahead and get started. First of all, I want to thank everybody for being here. Happy Monday to the group. We've got a great group of folks here on the phone. We've got buyers, procurement leaders, executives. We're thrilled that you're all here for our first live version of Resin Market Moves. Can't believe we've been doing this for a year now. And our very first AMA session, Ask Me Anything, Ask Us Anything in this case, as I'm joined with my two colleagues, Tyler Wheeler, Kevin McCaru, our two directors of procurement, both engineered materials and commodity resins. So here's how this is going to work. We're going to spend the first 10 to 12 minutes, depending on how long-winded I am, which is something I'm continuing to work on here. We're going to talk about what moved in the last week in resins, what it means for you, and what you should be doing about it right now. We're not going to have any canned slides today. Hopefully no fluff. We're going to have Kevin talk through the commodity resins, Tyler on the engineered side. These are the two guys that are living the data every day with our clients. And then we're going to get straight into your questions. So we're going to be monitoring the chat. I'm going to be reading those questions. We're all going to have a chance to chime in. I will say that we're unlikely to get to all of the questions today, but the promise that I made before the call remains. If you ask a question, we are going to answer it either on this forum or with an individualized personal follow-up from one of us directly. So with that said, there are really three things that helped converge in the market in the last week against producers. So I want to set the table just really quickly before Kevin and Tyler are going to get into the specifics because the macro level picture is pretty important for the context of any negotiation you're going to have. So the first thing we need to be cognizant of is crude oil. Um, we are all very familiar with the geography in that part of the world with the U.S.-Iran conflict and the Strait of Hormuz. The peace agreement has been finalized. Yes, there are certainly some tests to will that hold, but the market certainly responded to that. WTI dropped more than 9% in a single week, trading in the 70s now. Uh, that is the lowest level since earlier this year in March. And that's important because, you know, feedstock costs, right? And as we're going to get into, oil is very big in a lot of the feedstock cost picture. The justification, right, for cost increases for that reason alone, anything petroleum driven just got a lot weaker. Secondly, inventory. So, especially with polyethylene, I know Kevin is chomping at the proverbial bit to talk about this. We did get the preliminary information from May, and it is a historic story in terms of build. Almost 800 million pounds in polyethylene alone, which is in the last 11 years the biggest build that we've seen. Polypropylene, PVC, they all saw builds, and supply is remaining well ahead of demand, which is not a tight market. And the third leg of the stool, if you will, continues to be demand. At the highest level, it's not enough to absorb the supply, even with the constraints in the market. We've seen polyethylene domestic demand fall over 10%, polypropylene down over 6, and polypropylene exports have fallen back down. So the end market signals are not supportive of price increases at the highest levels. So, with that said, the big theme that I want you to walk away from, and if you talked to me in the last few months, you're probably tired of hearing me say this, but we need to keep in mind that cost pressure and pricing power are not the same thing. Yes, producers have real costs that they've internalized, and I don't want to dismiss that across the board, but the data right now doesn't support what the asks have been made into the market. And so that's a conversation that you need to be equipped to have. With that said, Kevin, please, if you don't mind, let's dive a little deeper into the commodity resins, maybe starting with your favorite resin, polyethylene.
Yeah, thanks, Michael. I mean, really, the story is really the inventory build. 791 million pounds is just a massive build. 47 days of inventory. Again, demand rates falling off to 81%, and exports being the low to mid 40% range. Suppliers, for example, for most leading with 10% June ask, certainly that's not supported by the data. And the Golden Triangle Polymers comes online, which is a joint venture of CP Chem, Chevron Phillips, and Qatar Energies. That's going to add to the inventory as well. So, short end of the story is a lot of inventory, downward pressure on pricing. Um, Similar story with polypropylene. We have downward pricing pressure there. Feedstocks are definitely go down. PGP is softened to around the mid to low 30-cent range. And then days of inventory have built up as well. I mean, we saw a gain of 101 million pounds. So, again, same situation. We've got some turnarounds. Okay. Total is fully operational now on a force majeure situation, and Phillips 66 has a planned turnaround as well. So a lot of different moving pieces here. Similar situation. There's some ass out there for 3 cents. It's certainly not supported. Um, so we do have one out, watch out for the polypropylene industry though, is there is a Dow PDH turnaround in Freeport, Texas in July. Typically those are, when you have a PDH unit go for a turnaround, certainly that's not a guarantee that we won't have a problem taking it back up. So just to watch out there. The buyer posture is really be cautious when you're buying. Look to negotiate the back end of June for polypropylene. Polystyrene, kind of a little bit different. We've got some modest increases likely, and they're really legitimate from the standpoint of June benzene contract. We did have a draw of inventory as well. So there are some dynamics there. We've got Amstay on a turnaround situation that's constraining supply. And really, there is some legitimacy to some price increases there. So really, the buyer's posture in that situation should be acknowledge that there's a benzene rationale for upward pricing pressures, but negotiate within a small range there. PVC is an interesting situation as well. We've got contested situation with 4 cent ask, and really the worst housing backdrop that we've seen in many years. Single family starts are at a 8 month low, and total starts are a 6 month low. So there's a lot of headwinds there in that industry. Certainly, they've been pushing for that 4 cents. Inventory builds. We've saw a 48 million um, pound build in May to 735 million. And really, the exports situation's challenging as well. Chinese exports are adding to the global pricing pressure. So a lot of different dynamics in PBC, but really the posture there is that use the housing data to push back on any type of pricing increases. PT is an interesting situation as well. We've got seasonally balanced situation. Typically, we do see seasonal increases due to bottling demand, but this year so far, we're seeing just modest increases, and that looks like they may plateau shortly with that. We do have situations where Indorama has a plant that's returning to healthy run rates. But really, the situation with them, that situation with PET is to look at the feedstocks, and we're going into hurricane season. There's always a supply chain risk there. So really secure for peak season coverage, but wait until the prices get down a little bit further if you want to balance your supply a little bit further, other than padding for a little bit of contingency. So that's really, Michael, that's really the commodity side of the resins. I guess I'll hand it over to Tyler to talk about the engineered resins.
Just real quick before Tyler, you get started, man, because I know you're chomping at the bit. Apparently, that's my slogan for the day here. Um, if you have a question, there's two ways you can do this. You can put it in the chat. You can put it in the Q&A section. We will, once Tyler is through the engineered resins, get to those questions. And we can experiment with taking people off mute and asking those questions. So I know there was a hand raised. We'll make sure to get to all your questions. With that said, Tyler, please go ahead.
Yeah, good morning, everybody. Welcome. When it comes to engineered resins, we're often talking about the aromatics chain, and we're looking at benzene, which is one of the higher corollary feedstocks with crude oil. Unfortunately, in the June trading window, there were some very high trades of benzene, and benzene actually settled up almost 30 cents to 491 for June contract settlement for benzene. That is a multi-year high. That is a very top of the market, we feel, especially because slightly after that trading window, which was opened in early May, benzene has been trading significantly lower than that in the $3 and change area, which is closer to in line where it's historically been. So we've seen a big reversion, at least in the trading, the daily spot prices of benzene. So from 491 contract in June, we're expecting to see maybe a whole dollar drop out of the benzene contract market. And suppliers who've been passing on price increases for PA66, PA6, ABS, PC globally, they've really looked at this conflict in Iran and some of the infrastructure that was taken offline and the futures of benzene and said, look, that is really the cost driver for these, increases on each of these resins of anywhere from about 15 to 35 cents, depending on which resin and grade and type. But it's really all come back to benzene. And with benzene now primed to settle significantly lower, tied with the fact that some of the nominations are starting to dry up, it looks like we're going to be at the peak of the season in June, and that in July, when the settlement comes out, it's going to be a real trigger for buyers that are paying attention to open up that conversation and really talk. In engineered resins, it's less about give me a lower price because if you don't, I'm going to buy from your competitor next month, which is often not the reality. It's much more a conversation of, okay, your costs went up and you passed them on to me despite my protestations. And now we can tell that your costs have come back down. So let's be fair in this and let's give back what is mine. Let's keep that margin fair. And to do that, we're really monitoring those feedstock costs. To be a little bit more specific, I would say that PA66 is facing a little bit more structural tightness, particularly in Asia. There is some BASF out there with some 10 cents a pound increases. Celanese is closing their Singapore polymerization plant. So we do see some upward momentum still from producers in the PA66 space. But I would say with ABS, it's certainly more stable to firm, and their ABS producers are watching this benzene contract settlement. And I think they know that conversations are going to start to be had that are a little bit more two-way. If for the buyers on the call who maybe feel like the conversations or negotiations they've had over the last couple months have maybe not even been a conversation. Maybe all it was here's a price increase letter and don't call me. I think they're expecting some of those conversations to come by. Similar with polycarbonate. Overall, we're not seeing a lot of supply risks in the industry for the engineered resins. A lot of the former announcements by some large polycarbonate manufacturers like Chimay and LG, where they may not be able to meet orders, have largely been unfounded. Resin is flowing, trade is flowing. People seem to have what they need, and now that some of the fear speculation, I'll call it, has been removed from market pricing and feedstock pricing, we're going to get into the conversations now this fall about what is really fair for this price and how quickly can we get back to a fair trade balance in price.
Thank you for that, Tyler. I appreciate that. Okay, that we are doing perfect on time. That is just about 11 minutes there for our section. So we're going to go ahead and get into some of the AMA part of the conversation. Just a quick reminder, feel free to put questions in either way, chat, Q&A. We did have one individual raise their hand, which I am going to allow Raul you to speak if you'd like to at this moment. Otherwise, I do have a question that's come in. Let's see. Okay. So the first question, I think this one's going to be for you, Kevin. Uh, let's see if I can do this. All right. All right, Raul, I gave you the ability to speak whenever you'd like to ask a question. Until we get to that, so Kevin, this polyethylene build situation, right, comes right on the heels of 30 cents a pound, right, that was put into the market. Can you help us all understand how the math works here? I mean, producers were still asking for 10 cents here, even in the month of June. Maybe that's a hurricane premium. Maybe well, some would argue that that's already been paid. What are your thoughts there?
Yeah, really, it really comes down to days of supply. I mean, the figure of 40, almost 47 days of supply is pretty substantial going into the hurricane season. So you take into account that essentially the feedstock side, ethylene's come down at its its highs, and then we got crude oil kind of trending down there as well. So essentially, we're looking at a situation where if you add up all the data between supply, and we're not even talking about the situation with demand, which is down quite a bit, as we said 81% for the demand rate. Really that there's nothing that says the math works to getting increase, let alone having to just have a rollover. We're talking about a decreasing market and pricing pressures there on the downward side.
Yeah, that's a great one, Kevin. Thank you so much for getting into that. Um, okay, here's another one that has come through. Um, this one's probably more, Tyler, for you as it's related to nylons. So there's been BASF announcing 10 cents a pound of increases for the month of June. 10 cents was the number that was referenced. We did see there was caprolactam dropping, which is certainly the feedstock for nylon 6. How should buyers as how should buyers be framing the conversation for nylon specifically with that fact being out there?
I think that part of that conversation should be exactly that, which is saying you're late to the table. If prices are going up and you're seeing price increases, that can be and has been a significant challenge. But when you're in your third or fourth month and your third or fourth increase, if you've been following along on the feedstock side, yeah, the leverage has been a bit one-sided, but now it's time to really ask a question. Okay, you're coming back to the table for an additional increase, and yet caprolactam has declined, and yet there are no significant force majeures that are impacting this. The supply is healthy to this material. The shipping lanes are open as far as international trade is concerned. So where is this 10 cents in your cost? Like, show me where this is, because here is the data that we have that disputes that. It looks like your costs are coming down, not going up. So my argument as a buyer to this latest round would be, Finally, I have some data to refute this increase where feedstocks aren't increasing anymore. So why the additional increase? Now it's an opportunity to put the salesperson a bit on the defensive and explain themselves, whereas before maybe they didn't feel the need to because the feedstock chain was doing the speaking for them. Now there's somebody has some explaining to do in this. So that's how I'd position this.
Someone has some explaining to do. That's well said, Tyler. I like that. Okay, we have another one here. Let's see. How do we see U.S. This one's for you, Kevin. U.S. origin polyethylene prices, so that's the domestic polyethylene supply against China and other countries, competitive or not? I certainly seen some interesting behavior out of China with all of this, Kevin.
So yeah, let's talk about that. The Iran war conflict really kind of exposed the producers in North America to a threat that has kind of been building with regards to China's capacity for their self-sufficiency. As they kind of been building out their supply, their domestic economy's been relatively soft with regards to demand. So they're able to kind of put polyethylene out into the export market at pretty low prices. When talk about margins, there's a certain margin that producers in North America and US under, our economics system is looking to get to maintain some margins. You don't necessarily have those pressures in China. There's a different economic model. So certainly it's going to be competitive in the long term. For right now, the domestic economy is soft. So supply is definitely going to be a challenge to the North American producers. And we've seen that with the latest data at only 42% for export PE in North America.
Thank you for that, Kevin. We've got another question here. This one's going to go again back to you, Kev. What is your expectation of polypropylene pricing for the rest of 2026 and beyond? We certainly are seeing the market turn favorably back to the buyers. What's your expectation on the go forward?
I think we look at just, the feedstock cost, PGP, obviously that's been on the downward side. There's a little bit more to that story, though. Even though we have had a build in polypropylene, we do always have the potential of disruptions during the summer. So there is a little cautious optimism that that trend will continue. However, that typically hasn't been the case always during the summer. So there's a little bit of a risk premium there. Towards the end of the year, there was some margin expansion in previous settlements. So we look to see that producers are definitely or processors are definitely going to try to take that out with contract resets. And we'll see how successful they are in Q4 when they start those discussions. Looking ahead to 2027, we're expecting an economic recovery situation. And then with that, we'll probably see some increased polypropylene prices. Right now, it's a little hard to say exactly how that will fare out because typically in Q1, then they do a lot of turnarounds. That sets the table for how successful the supply position will be starting out of the gate for the beginning of the year.
Thank you for that, Kevin. We've got another one that's come in here. This is related to crude oil. So crude, we talked about that crude drop 90 or 99%, so down to below $80 a barrel. What does this actually mean in terms of how does it flow through? What sort of time lag should we expect? Maybe Tyler, that might be a good place for you to start with respect to, benzene perhaps and how that's so heavily tied to what oil markets do.
Yeah, it's interesting. Oil jumps up fast, and all of a sudden, the producers are sending, price increase letters out there like it's candy. So I guess, when oil goes up, resin prices go up really fast. Uh, Question is, when oil prices come back down, how quickly do resin prices come back down? Um, the way I've been thinking about this is that with benzene, seeing the steep reversal in the spot prices versus contracts, so trading over $1 shorter of its supposed peak in the early window for June. When I look at that, I think, okay, maybe that's volatility, or that would maybe be the best argument against why prices are coming down. You might say, well, yeah, it went up and it jumped down, but it'll go back up again. That could be a weak but a argument. I would say that once you see about 2 months worth of settlement, now one data point does not a trend make, right? So now once you have two, now I think that's something that becomes like irrefutable. Like, this is where we are. We've been here for 60 days. One more month and it's going to be a whole quarter. You can't stand on ceremony and tell me that the costs haven't come through to you during that time. So I think that the longer benzene remains shorter, the more leverage comes. The longer benzene stays depressed, the more leverage gets moved to the buyer. And I think one of the key markets is going to be key markers or signals is going to be the 30 and then the 60-day contract settlement for benzene. So we're eagerly watching for those to come out for July and then August to go further. So my answer, as far as in the engineers space at least, probably about 60 days.
Thank you for that, Tyler. Kevin, I want to give you a chance to weigh in on that question as well. Certainly, polyethylene, polypropylene may be less directly related to what happens with oil, given the natural gas and the shale gas advantage we have here in North America. But how would you tackle that for the commodity resins?
So one of the things that people are not really talking about, even though the price of oil's been going down, is obviously there's refining constraints that we've had in, that we really haven't seen a growth in that area. So long term, I think that's one thing people have to keep an eye out. But more specific to your question, I think that if we look at oil as a general commodity and in where it flows into different components and so forth. There is the connection between that and supply and the economic picture. They're all interconnected. If you have an economic situation like we've had that's relatively been muted in the last couple of years where people expected growth, that's really not going to drive the prices as high. And we saw that towards the end of last year with polypropylene and polyethylene. But if that growth starts kicking in, I think we're going to see that tick up in a couple different ways, and that might be in the price of oil as well. So we'll have to kind of keep an eye out long term on that. And again, refinery capacity. I think those are the two things to watch out for that.
We have a follow-up question that we should get to while we are talking about oil. The difference between Brent crude and dated Brent crude, which speaks to the difference between the physical trading as well as what's happening in the market, being some of the largest gaps between the two numbers that we've seen ever. Um, Kevin, maybe that one is for you. Any thoughts on how first of all, is that sustainable? What are the thoughts on as it moves further and potentially we get some um, easing of the tensions in the Middle East with this deal hopefully sticking?
Yeah, I guess there's a couple of different things to unpack in that question. Really, is where does the conflict wind down, and how long does it stay that way? I mean, there's a lot of different. Do I think it's going to be over tomorrow? Absolutely not. There's going to be some skirmishes, regardless of what happens. The question is, if the Strait of Hormuz is open to a significant degree, does commerce continue to flow, and that becomes a more balanced supply situation for oil in general. And that gap that you mentioned, Michael, will probably start closing once that people start feeling that that is going to be a sustainable situation. Right now, there's kind of an insurance premium between the deltas right now. Once Once we get a little bit more stability, I think in the marketplaces after maybe 2 or 3 months of kind of a reduced level of tension in that area, I think that we'll probably see that gap start closing.
And I appreciate the call out on the echo. We'll try our best to do something about that. I may have to move into a different office, so I apologize. We'll get to another question. Let's see. We have an interesting question here on engineered materials. Tyler, this one's for you. Suppliers are still coming in for increases related to base oil, which makes up a fair amount of our formulation. As I think about that, maybe that's a TPE or that type of material that's got oil as a primary component of its formulation, maybe to make it soft or something along those lines. What is the connection or correlation between crude and those base oils that are often used in compounding? I can take a stab at that one, Tyler,
Sure.
unless so. My background worked for Poly One. We had the GLS business. They claim to have invented TPEs. So we bought a lot of mineral oil, those types of oils that would go into those types of formulations to make them soft. We did often see a trend where those oils would follow Brent oil. There would be a little bit of a lag, as one might expect, but they would definitely correlate with about a 30-day lag is typically what we saw. Now, with that said, there's some ambiguity around the type of oil. There's a lot of different types of oil that can go in, and some of the different depending on how clean the oil is. These are questions I would certainly be asking your supplier if you don't know, what is the type of oil that goes into my formulation. Uh, but what I would really be pushing back on now is, we talked about it, right? Oil has come down. If they've been using that as an argument to go up, there is absolutely an argument for it to be starting to go down. And if they bring the argument back to you about the lag, well, then the clock has now started as of when oil started coming back down last week, right? And that should be part of your ask as you go back to your supplier. Tyler, anything to add to that?
No, I think that's a pretty clear direction for the additive portion of that PPE.
Okay, perfect. All right. All right. We've got another question. I'm sure you're both maybe one chime in on this one. What is the single biggest mistake that you see when you talk to resin buyers about responding to a price nomination letter? One of the dozens upon dozens that you all have received this year from your suppliers.
Can I take that one, Michael?
I knew you would want to, Kevin, so please.
I think the first thing is responding without data and facts. If you do not have data and you're just going back to them and say, I'm not going to accept this, the question is, why should they listen to you? Because you're not providing them a justification for the pushback. So having your facts, doing your meeting with your team, your procurement team before you go into those discussions, whether you're responding in an email, making a call back, or visiting a supplier on their own home turf, or having them come into your operations as well. Make sure you do a pre-meeting with the data in front of yourself and you'll get better results.
I think for me, seeing some of the clients that we've worked with, they start off with a policy of, we just say no to all price increases. Okay. I mean, maybe not a bad policy, but all it does is delay the actual negotiation, until another week or another volley, right? We're going to go up. No, you're not. Yes, we are. And then how much now, right? And that goes back to coming back with a plan and with data. And frankly, in engineered materials, there's a lot of times where the ultimate leverage in a negotiation is the ability to walk away. And a lot of folks that are, molding engineered resin parts and components, they don't have that ability to just commoditize it and walk away. So what are we really negotiating? Well, we're negotiating a bit of fairness, right? You're gonna give me this price increase letter, and your margin is gonna go up because I know what the costs are that go into that. So it's really getting your salesperson to a point where they're having to justify, yes, we're taking more margin for your business because we can. Well, does that sound like a partner that you want included on your next RFPs? Does that sound like somebody you want to grow with? All of the leverage that you have of potential carrots for the future kind of go out the window when a salesperson takes that type of stance, right? But you can only get them to identify that that's the stance they're taking once you have the data behind the price increase and you can back into margin and say, hey, I know you don't want me to know what margin you're making, but I do, and it's gone up. And what are we going to do about that? And what solutions are you bringing to us in this fair negotiation as we're going to continue to do business together? So I think that it's really putting a plan together and not just kind of blanketing saying, well, we just don't go up in costs.
Well said. Well said, guys. We had another question come in. When do we consider, and I know this is going to require a little bit of nuance, when do we consider that the price will reach the same levels as it had before the Middle East conflict in the specific resins? And this to me speaks to something that we've been saying here a while, which price goes up like rockets in this industry and falls like feathers. Part of the way to make the price fall instead of like a feather, but rather like a rock, is to have data and insight to use. But I do want to take an opportunity to ask you guys both that question. Maybe Kevin, we'll start with you in the commodities. When do you think we'll get to that point in polyethylene, polypropylene? And again, I realize we're asking you to paint with a broad brush here, but um, you're a great painter. Go ahead.
So let's talk about kind of where the supply on the demand side was last year, because I think that's really where we're looking at the baseline discussions here. So really, it depends on the economic situation going forward. If demand continues to remain not as robust with regards to the supply in the industry, then I believe that it's probably going to get closer to that. If the demand starts picking up as growth projections on GDP and so forth going forward, then I don't know that's going to reach those levels, because when it does reach those levels, there's a couple reasons why. One, it's oversupply. Two, it could be demand is very, very weak, or several other reasons with regards to capacity additions and so forth. So it really depends on the economic situation, in my opinion, and where we're headed with regards to GDP and other economic indicators.
Tyler, what about you on the engineered resins front? I mean, we're certainly going to get a bump here with the Middle East conflict. You certainly walked through this morning on a call that we were on together, where a lot of this has been margin, and the actual impact has not really been felt outside of a few cases. But when do you think that on the engineered resin front we'll see, some settlement of prices, back to similar levels, maybe to where we are pre-conflict?
Well, I think that it's going to be a bit of a tale of two buyers. If you have alternates qualified, if you can move business, especially if the producers know that you can move business, you're going to come back down quicker than the rest of the group. And I think that you could see, end of 2025 pricing maybe as early as this time next year. I would say. It's going to take a little bit longer. On the other side, if you're kind of just following the markets or just, uh, I guess, awaiting an opportunity to go down, be it your fiscal year restarts or the quarterly indexes adjust, it's going to take a little bit longer. I also wonder, uh, oftentimes, resin buyers are incentivized to hit their numbers in a fiscal year. So if your fiscal year is on the calendar year, I wonder, are there resin buyers out there that are looking at this and saying, well, 2026 is a wash. We're halfway through the year. Prices have gone up significantly. Even if I could recoup everything that went up by the end of the year, I'm still not going to make my target. So is there an incentive to say, well, let's miss our target for 2026, but let's hit it for 2027? Do we do a big cost project that's renegotiating to the baseline, and we execute that in December so that we can achieve 12 months of that savings pipeline for next year? So I think between some of the quarterly nature of engineered resins and then some of the mixed incentives of end of year contract restructuring, I think it's going to take a little bit longer if you're not commoditized and going to the market each month with who am I going to buy polycarbonate from at what price this month, bid for it. So I guess the long answer is that I think if you're have some of the things I just talked about, it could be beginning of 2028, I suppose, or if you're a little bit more aggressive, maybe as early as or late spring, early summer next year. But it's going to take some time. See, there's a lot of cost has gone into these resins, and to untangle them successfully is going to take time.
So we have another question here with respect to PET. Do you see a relevant impact of EPR, extended producer responsibility, on PET or rPET or rPET pricing? Kevin, of course, this is in relation to EPR legislation, already enacted in Maine, Oregon, Colorado, California. I'm probably missing a few mandatory recycling obligations, but what are your thoughts on that question, Kev?
That's an interesting question because they've had some asset rationalization recently with some rPET facilities for some producers. And those laws were already on the books. So we're not seeing the demand last year when they started doing some of those consolidations for some of the major producers. Um, really depends. There's a lot of ambiguity on who owns the responsibility, who pays for it, and so forth. Some people have said, and I don't want to get it too much down in the weeds, but said, maybe I just pay the fine versus pay for an extra person to do the tracking and so forth. So there's a lot of things to unpack with that legislation, but I think that in general, there's going to be, there eventually will be some cost implications to that. Will they outweigh some of the market forces there with regards to PET supply? Obviously there's a lot of imports for PET, and those have kind of gone through a couple different disruptions, and I should say disruptions, but challenges with regards to are they tariffed, are they not, that type of thing. So there's a lot of other factors, just not the EPR laws that I think will impact the pricing long term. But I think it will have some impact to a certain degree. The question is how much.
I feel like in a former position, I was purchasing quite a bit of PET for Amcor, and this was when sustainability was heating up quite a bit. And I feel like we've seen this a few times with like the Superfund tax, or right now a popular one is the fuel surcharge or freight surcharge that we're seeing, right? It almost seems like these taxes or regulations kind of get baked up, and then there's a who's paying for it? Is it us? Are we going to add it as a line item? And then there's a whole fight about we can't pay extra line items, so we'll just roll it into the cost, and then it kind of just disappears in there somewhere. But to Kevin's point, I think this is, how I feel about it too, is that some pricing exposure on that is like seventh on the list of things to watch. Market forces being first and foremost, and other things like an anti-dumping regulation that's in the future, or a tariff, something like that's going to likely play a much larger portion than the tax from the employee from the responsibility portion.
You hit on something that is a pain point for every person on this call, I think, in one form or fashion. The freight, the fuel surcharge element. We had a question come in on that. Uh, you know, basically the question is, what do I do about freight surcharges now that the oil market has come down with what we were talking about earlier, other than just keeping score and putting that score back in front of your supplier? What do you guys, what have you seen be effective in getting those fuel surcharges to be rolled back or pulled off?
Sometimes, Michael, I think there's a disconnect by some broad of the broader group to think that just because gas prices go down, that diesel prices are going to follow in the same rapid pace, and we're not seeing that yet. Obviously, they will come down, but there's a little bit more of a lag there and so forth, and demand for commerce and so forth. Again, economic activity going forward. So I think there's a little bit more to that, and it definitely has a little bit more lag to that. So it's not just that you could say, okay, gas prices are down by 20% or something like that. I should get that on diesel. You really have to look at the correlation between gas and diesel and where that is and the lagging effect.
Anything to add to that, Tyler?
I mean, I like what you said about keeping score. It's not great for relationships, but it's pretty powerful in negotiations, right? Like, if you're going to put a fuel surcharge on me, I'm going to mark down the date. I'm going to look at whatever the diesel, market fuel rate was the 1 month prior, and I'm going to set an alert that says, like, as soon as it comes back down to that, I'm going to email you and tell you I'm not paying this anymore. And in the meantime, it's just keeping score. I think it's an intended pass through, which for the most part, somebody has to absorb it, and nobody really wants to. I just think making sure that you're on top of it more than your seller is going to be the key to success there. For when it's time to get that taken off, right?
So another question has come in. I think this is from somebody that has at least been paying attention to some of our updates. So with Celanese, this one's for you, Tyler. I apologize. With Celanese pulling off nylon 6,6 capacity globally, referencing, what's happening in Singapore, should nylon buyers be worried about supply availability in the second half of the year or in next year, 2027?
I don't think supply availability is going to be a concern unless demand picks up significantly. I think globally we are in a position where we can make more resin than we need for almost all the resin families. The one limiter to that seems to be PA66, specifically in Asia, where some of the economics right now aren't incentivizing a large enough, uh, like the incentives aren't there to produce at a scale that could be needed. But we haven't seen demand really increase to that point to cause a shortage. So I would say that if demand really takes off, then you might have to look a little bit closer at your PA66 partners and understand their supply footprint and what it means for your business. But if we stay about where we're at and about where we're predicted to be at, I don't see this as being a direct supply concern yet. I think it would take another true market event for us to be thinking about rationalization or being put on allocation. So I don't think there's an immediate risk here.
Yeah, there's certainly a lot of nylon in the market right now, just in general. Seems to be the story in a lot of resins being oversupplied. We did have a question come in on PVC, which is a resin that we've just touched on here, certainly one that we help our clients understand. So this question is with PVC coming in at let me see. Construction, right, at a 6-year low in the market. And with the yeah, he's referring to the Chinese carbide, the coal-fired supply. What, how are you using that in domestic PVC conversations? Is really the question. Tyler, maybe I'll start with you, and Kevin, I'm sure you've got some thoughts you'll want to add there.
For me, I'm looking at what is the domestic market and spot deals, contract deals, what is that trending at? Then comparing that to what is the export market doing? So the export market's going to be much lower margin, competing with the carbide-based PVC out of China, which again flooded the market to the tune of 1.7 billion pounds increased from March to April. That's 48% increase of export of PVC from China. So there was a potential looming gap there, and China just flooded it. So the availability is wide. The opportunity to buy that is there. Export pricing margin is at like 7 cents to 8 cents compared to like 21 domestic. So when it comes to the domestic pricing market, it's really, can producers hold on to, their own, uh, can they hold on to that margin that's currently in the market and really fight off the freight arbitrage to bring it in from overseas, right? And last we looked, it was getting pretty close. Like it's getting to the point now where the stuff out of China, especially if they continue to ramp this up, is going to be cheaper. Where it's going to be a decent incentive to switch. That's going to cause domestic demand to fall and then prices to come down again. So it feels like to me, there's some serious stability, some real competition in PVC, and that moving forward, a threat to source it internationally is going to have some real footing for the domestic producers.
Yeah, I'd like to chime in as well, Michael. Just
Please.
talk about on the demand side because really, housing, construction, so forth has been lagging for quite a while, as we mentioned. And once that starts picking up, I think there's going to be a little bit more opportunity for that to kind of normalize. But for right now, there's definitely, as Tyler mentioned, some cost pressures coming out of China. Then the question is really is where's the market long term after we start seeing a recovery and so forth in the housing market? Is it go elevated more, or does that kind of offset that with regards to supply in the industry? So a couple different moving pieces there, both on demand side and the competition from supply.
Great. We had another one come in. How do we see next month's pricing for additives? This is something we haven't talked directly about, and additives are certainly that's a big, broad group of potential items. Um, I'm thinking about the first thing that comes to my mind is TiO2, just with colorants and those pigments, which is a pretty fundamentally different supply structure than a lot of the base resins. A lot of that is tied to China. Um, Tyler, I mean, any thoughts on that one? I mean, I think, really we should see some easing, maybe 5 to 10%, depending on your relationship. There's so many variables that go into additives, but I'm thinking something along those lines, given all of the downward momentum in um, price, oil, some of the Chinese export. Um, any additional thoughts there?
My thoughts are that producers are capitalizing on a volatile and upward trending market so much so, and they've put so much additional, cost and margin into their price increase letters that it would almost be convoluting their own message to, here's your resin price increase. Oh, by the way, here's your TiO2 and your colorant and your, kind of everything else. I think that would be a bit of uh, a mixed strategy for some of the producers to take. So I think they're happy to take it on the base resin material right now, and push that through. And then, yeah, I expect some lagging or indicators of where the additive market has settled, whether that's just up or down slightly. I haven't personally seen a whole lot of volatility on the additive side. And again, I think that's just because right now producers are happy to win on the basically the base costs of their resin, and the price increases that they've pushed through. So it's a good question. If there was something, specific, whether it's like a flame retardant or a colorant or something for lubriciousness or oil, like you said earlier, if there's a specific adder or a specific additive that you wanted to dive into, we could probably look at that. But on a big scale, probably not much more to add than the producers are already getting it.
Yep. I thank you, Tyler. I was going to drive home that point. We can talk specifics with the individual that asked that question afterwards, and that was already on my follow-up list. So perfect. This next one is for you too, Tyler. We want to talk about POM, acetal here. I know we've got the copolymer and the homopolymer markets. The question is around, is its price driven more by the individual producer's sales strategy than by overall market trends? Maybe that's a question about homopolymer with respect to Celanese DuPont. But Tyler, you want to take that one?
I think that okay. So the question, so you said,
It's about
is the
POM.
price? Yeah. Oh, yeah, yeah. Yeah. No, I got that acetal. But the question was, are we talking about, is the price determined more from the producer's like margin management plan or market overall?
Yep, that's right.
Okay. So I would say both. And I say that to say that the floor is set by the producer's strategy and the ceiling is set by the market. So whatever you're paying for acetal, you're probably paying that because your producer is channel managing you. They know who you are. They know how much you buy. You have some set price. And then opportunities to increase that is what they'll take advantage of. So, yes, I think that the producers are absolutely managing, especially for acetal particularly. This is our specific price in the marketplace. Oftentimes, it's not a commoditized space. So they're able to have the regulatory documents in place to say, this is our grade, this is how it works, this is the applications you can use it in, here's your price. But then once again, when global resin markets go up, of course that they're knocking on the door to say, we want to be a part of that price increase because of the because of what's happening in either adjacent markets or in the feedstock side too. So I think that the answer would be yes, producers individually have their own markets that they're trying to play in and set pricing accordingly, but they're never going to leave an opportunity uh, for upward pricing on the table.
Yeah, that's a good point. And I misspoke earlier. Of course, I meant Delrin, who's now on their own out there in the market. So, um,
Mm.
good question. And we will take that one offline as well. We do have a few more questions, but we are up against the mark here. So we'll take those offline and follow up individually. Just one last quick plug. Um, Check us out at resinsmart.ai. We do this every week virtually, so follow us on social media. We will probably do a live version of this again, depending on the feedback that we get. And if you want help answering one of the most challenging questions in resin, which is how do I know that that I'm paying a fair price for the materials that I buy? That is what we do here at ResinSmart. Fill out a resin price benchmark here. I've dropped in the chat. We can help you answer that question and help you, more importantly, develop a plan of what to do about it on a go-forward basis. So with all that said, I want to give Tyler, Kevin, a quick opportunity. Anything else, closing remarks, or anything else you'd like to share with the group before we wrap up today?
I guess I'll go first. Michael, we had some previous discussions about what is signal and what is a noise. There's been a lot of noise in the system and in the environment, and not a lot of signals. The signals that we did get were mostly on the downward side. So for our audience out there that's listened today, really understand that the signals are really what's going to drive price, not the noise.
And I would add to that, Kevin, that I think for resin buyers who feel like they've really gotten their teeth kicked in negotiating and they feel like they're losing month over month over month for 2026, relief is on the way. I think that we're through the worst of it. I think that with more clarity and more normalization of the feedstocks themselves, you're going to be, and if you've been keeping score, you're going to have a very healthy procurement pipeline. And as resin buyers, I know that gets us pretty excited. So I would say relief is on the way.
That is great way to wrap it up, guys. Thank you again for the support today. Everybody have a great week out there. As Kevin likes to say, purchase wisely this week and be safe out there. Take care, everybody.